Good morning and welcome to the Sarah Finkelstein Show, where we like to share valuable tips to help you get to a better financial future. And part of your finances in your lifetime is a mortgage. And today I have a special guest who is going to be talking about today's mortgage environment. Let me introduce you to James Matarazzo, and let me tell you a little bit about James. Mr. James Matarazzo has been a mortgage origination professional for more than 34 years, and he's been involved in thousands, I repeat, thousands of lending transactions. He is a sales, business development, and operations executive who has delivered outstanding results for both large and small companies, including Countrywide Financial Corporation, Washington Mutual Bank, Bank United, and more recently ran sales and operations for the East and Midwest region of PRMG. In all cases, he has led sales and support teams in generating double-digit revenue increases. James has an extensive record in areas including sales, leadership, best practices, team building, and business development in both the business to consumer and the business to business environments. He has produced substantial profit growth and improved customer satisfaction with innovative sales and training programs, enabling companies to gain a competitive edge. He is a true mortgage professional in every sense. A recent customer reviewed James and said the following: James is a treasure of knowledge and wisdom when it comes to mortgages and what really matters to a home buyer nowadays. You can tell that when working with James. He always has your best interest in mind. James is a go-to resource when it comes to mortgages and the home financing process. Welcome, James. I am delighted that you are here to join me in sharing some valuable information for our listening and watching audience. And before I start showering you with questions, is there anything you want to say before we get started?
First of all, thank you so much for the great introduction. I really appreciate that. And I couldn't have said it better myself. But and thank you for the opportunity. Yeah, thank you for the opportunity. And I'm happy to be here today and pick my brain, ask me questions, and let's get going.
Perfect. I'm so glad you're here.
Thank you.
So my first question to you is, what got you started in the mortgage industry 34 years ago?
Yeah, that's a great question. My kids ask me the same thing. How did you get started in this crazy business that you've been in for so long? I was 22 years old, going to college at night, working at a bank during the day as a bank teller. And somebody asked me one day, they said, "How much are you making at that bank? 12,000 a year?" And I said, 12,100, thank you very much. And he started to laugh and he said, "You know, you're very personable. Why don't you come work for me and my brother-in-law? We own a mortgage company. And I bet you after you take the test and you start working with us, that you'll double your income within your first year." So I had nothing to lose at the time. I was still living at home, going to school at night, as I said. And I took the leap. I took the test. I got a 98 on the test. And now I'm a mortgage broker. So now what do? I go to work that Monday morning. I get kicked out of the office for being in the office, thinking I'm going to take loan applications where the people were going to come to me that needed a mortgage, when in reality, I had to go find those borrowers and those buyers. And I asked my boss at the time, "Where do I find these buyers? Where do I take the loan applications? I'm your new mortgage broker." And he said, "You got to go out to the real estate offices." And this is before the internet and everything else. Everything was kind of backwards. Realtors used to show people the houses first and then get them qualified for the mortgage. Now it's the opposite. You have to get pre-approved first before a real estate agent will show a buyer any houses. So I went down to the very first real estate office I saw and met with the broker owner, and he said, "Who are you?" And I told him who I was, and he looked at my business card, he ripped it up, he threw it in my face and said, "Get out of my office. You're not allowed to solicit business here, and your boss is a crook." So
What
I
a great
left, I
start.
walked out, I called up my boss and said, "I got thrown out of the very first real estate office you told me to go to. What do I do?" He says, "Go to the next one," and just go to the next one. And I did. And I was young and dumb and just kept going. And eventually got my first loan application probably 3 weeks later at a real estate office in Miami. And I've been in this crazy business ever since. So I stayed in it because I'm helping people. And that's kind of my introduction into the mortgage business, was just be persistent, go help people. And that's how I got into the mortgage business 34 years ago.
That's an amazing story about your first day.
Yeah, it was very, very trying, but I had a big decision to make. I could have crawled back to the bank and maybe gotten my job back, and who knows what path that would have led me to. But this path, I wouldn't have changed anything. It's the way we learned back then. There wasn't any training. You just go out, just went out and did it.
That's great. So you probably work many, many hours. And how do you balance your personal life with your work life?
Well, you could probably see behind me, I have pictures of baseball bats, and I'm very big into sports. And I have 6 children that I've been very blessed and lucky enough to have coached them, all 6 of them at various stages of their life over the last 20 years in multiple sports, baseball, flag football, and soccer. So that's my balance. That's kind of my escape. I can't tell you that I don't bring the cell phone out to the field and get a phone call at 7 o'clock at night having to pre-qualify somebody. I do answer the phone. I tell them, "Let me get back in front of the computer. I'm on the soccer field right now. I'll get back to you and I'll get you pre-qualified." But that's the balance. You have to find time mentally, physically, to get away from the constant work, because if all you're doing is working, when you have a family, where I have a beautiful wife, I have the 6 beautiful children, and I have to spend time with them and for them. So you have to make that time.
And 6 children, I mean, that's, by today's standards, that's a lot of children. But what made you stop at just half a dozen? You could have gone for a dozen. One of my dearest friends, her goal was, before she even got married, that she would have a dozen kids, and she actually stopped at 2.
Well, I signed up for 2. I didn't know my wife meant 2 at a time. We don't have any twins, but we might as well have. They were very close together in age. But don't ask me that question too loudly in front of my wife. She may want to have another one. So I think it just comes a time when you have to stop. My youngest is 14 years old, so I think we're good.
And how old is your oldest?
He's 26.
Nice. That's great. So what would you say gives you the most satisfaction in regards to the work you do?
Well, I would say I work a lot with veterans and first-time home buyers. And with veterans, we really want to make sure that they are taken care of, meaning that whole process has to be seamless. And we want to make sure that they get the best possible loan for them. And the VA does a great job in ensuring that veterans get into a home. So I take pride in that. That's very satisfying when I'm able to sit across from a veteran at the closing table, which I do attend all of my closings that are local in South Florida. And I help that veteran get into a home, be it their first home or whatever number of homes that they've purchased. Same thing with first-time home buyers. And a first-time home buyer may or may not be somebody just coming out of college buying their first home. I can remember a couple of years ago, I did a first-time home buyer loan for a borrower who was in her 70s, and she was a widow, and she had never owned a home before. And she finally bought her first condominium in a 55 and older community and She was crying at the closing table because she was so happy. She never thought she'd be able to purchase a home on her own. And so those two, right off the top of my head, I can always go back to and say, this is why I do what I do.
That's wonderful. It's good to hear. So you're not going after a specific market. You just like to be there to help.
Yeah, people ask me that all the time. Why don't you just concentrate on one specific home buyer? I believe everybody should have the opportunity to achieve the American dream. So I don't want to pigeonhole myself into one group or another. I'm here to help and counsel anybody. And if I can't help them, I want to be the guy that knows a guy or a lady that can help them. So I do that all the time. And I'm not going to string anybody along. If I can't help them for whatever the reason is, I'm going to try to find a solution for them. And the way I do that is by asking questions. I just ask more questions than they ask me. So I'm formulating that whole scenario and to see if I can do the loan for them just by talking to them and asking them questions. And by the end of the conversation, we're going to have a game plan, whether it includes me or there's somebody I could refer them to.
Yeah, asking questions is so important when you're in a position to help people. So that's great. Yeah. So do you think that we are possibly heading for a housing bubble?
I wish I had a dollar for every time I was asked that question in the last 2 or 3 years. My short answer is no, I don't believe so. And there's a few reasons why. Way back in the early 2000s, when we as a collective mortgage conglomerate were doing these stated income, stated asset loans, no income verification loans, MENA loans, CISA loans, no income, no asset, stated income, stated asset, fog a mirror, and you got a loan. That kind of created an anomaly in the industry to where people were going into properties without any skin in the game. We would provide them a first mortgage of 80% of the purchase price, and then we would piggyback a second mortgage behind it with 20%. So the borrowers had no money invested in the $400,000 property they were buying. We didn't verify their income. We didn't verify assets. So we kind of set them up to fail in some cases. And unfortunately, when the economic downturn happened in 2007, 8, 9, whenever you want to pinpoint when it started, those people were the first people to leave their properties because if they couldn't make the mortgage payment, it didn't hurt because they didn't have any money invested in it. So a lot of I'm not saying everybody, but a lot of people that happened to. On top of that, the builders exited in mass quantity across the country, and some of them really have never come back. So we have a housing crisis because we have a lack of inventory. In the early 2000s and the economic times when we had that downturn, we had plenty of houses. So it was easy to walk away. There was a bunch of foreclosures. You could pick up properties for very cheap because they devalued. It's all supply and demand. We had a surplus of houses and not enough demand. Obviously, it's going to devalue the house. Today, it's the opposite. We have a demand that is totally outpacing what the inventory is. The other thing I look at is people are living longer. Medicine has gotten better over the last 20 years. So people are living longer. You know, you hate to say it, when people die, they're leaving a house, whether they're leaving it to their children or it gets sold. That's a piece of inventory. They're living longer. They're not vacating the homes. So we have all of these baby boomers and Gen Xers and all of these different first-time home buyers that were born in the late 80s, early 90s, looking to purchase a home, and there's just no inventory. So I don't think we're going to have a bubble. I think we're going to have a slight correction and a leveling off of values. But the inventory problem is not going to go away anytime soon. I don't see it catching up. I've heard anywhere from 5.5 to 11 million houses in need across the country. And in certain pockets of the country, a large percentage of that is in South Florida. There's many people that want to live here and there's just no inventory. But it's not just Florida, it's New York, it's California, it's other places across the country where they just don't have the inventory. So the values are going to continue to rise, or maybe they'll level off, but they're not going to drop, in my opinion, and other economists' opinion, and other mortgage people that are much smarter than I am. We're all saying the same thing. I have not heard one person say, sell everything now because everything's going to plummet. Real estate is still a great investment. We may not have the appreciation of 15 to 18% or 21% year over year, like in some pockets of the country we've been experiencing. It may normalize to 8 to 10 to maybe 12% of appreciation. But I don't see us having a crash like we did the last time.
Yeah, I think Florida is one of those hot areas nowadays. I remember when I moved to Florida in 1990, you could get a single family house on a corner lot for like $100,000. It was just incredible. But I've seen in the last few years how prices have gone up. Even rentals, I mean, rental prices are just climbing up like houses. So I understand what you're saying. It's really amazing. So how do you mentioned you like to work with a first time home buyer. What do you do to prepare the first time home buyer?
There's a whole process that I go through. And again, it's asking questions. What's your living situation now? Do you live with parents or are you renting? If you're renting, what is your current rent? That has a lot to do with, I'm already kind of backing into a maximum loan amount and mortgage payment based on how they answer these questions. Because some people say, oh, I definitely want to own my first home. I'm ready to pay $500 a month mortgage payment instead of paying my landlord $2,000. And I'm going to tell them that's really not going to happen, because real estate taxes alone may be close to $500 a month, let alone the mortgage payment. So we have to get to a starting point, and it's all about asking the questions. What payment are you comfortable with? Is the rent payment too high, or could you add an extra $300 or $400 or $500 to a mortgage payment? Budgeting. We talk about budgeting. How much cash do you have access to? I never ask people how much cash do they have in the bank for the purchase, but how much cash do you have access to? Because they may have $1,000 in the bank, but their parents are willing to co-sign for them. And if I don't ask those questions, they may not volunteer that information to me. So if the parents will help co-sign with them, then they have access to more funds. That's more down payment. That's possibly a higher purchase price and loan amount, as long as they can qualify for the mortgage payment. I also talk to them about some down payment assistance programs that there are around the country. And in certain counties and certain cities, they have their own down payment assistance money that they have to get rid of. They want to help people get into a home. And they have their own different requirements. You can only make a certain amount of money. You can't have owned a property in the last 3 years to be considered a first-time home buyer. There's certain debt to income requirements that they have, certain credit score requirements that they have. But in some cases, they can give up to $5,000, $7,500. I've seen up to $40,000 and $50,000 in assistance. It's in a way, it's almost like a gift that they're gifting that money to the first-time home buyer. It's technically what they call a silent second mortgage, and they put some parameters around it, but the buyers don't have to pay that second mortgage payment every month. They only have to make the first mortgage payment that I provide them. As long as they live in the property at least 10 years or 15 years, depending on the down payment assistance program, they never have to make a payment on it. It's forgiven after that 10 or 15 year period of time, as long as they live in that property as their primary residence. So I help them navigate through that process. They usually have to take an 8-hour class on being a first-time home buyer. What is homeowners insurance? What are paying real estate taxes? They're not used to doing that if they've never owned a home before. So there's a lot of education that goes into it. My main point when I talk to anybody, be it a first-time home buyer or not, is I don't want to put you in a position to fail. I don't want to hear that you can't make the first mortgage payment, or that you're having a hard time making the payment. So a lot of analysis, a lot of questions get answered in the beginning of the process. And I more or less hold their hand throughout the process. again, be it a first-time home buyer or a seasoned buyer.
That's wonderful. And I never heard about that home buyer assistance until you mentioned it to me.
A lot of people don't know about it. And what I normally tell people to do to get some information is just Google down payment assistance program, city of blank, whatever city you want to go to. And the very first hyperlink will give that city's down payment assistance program all the parameters in detail.
That's great. Good to know. I'm sure some of the audience could probably jot that down and share that valuable information. So James, what would you say sets you apart from other professionals in the industry?
Right off the bat, I could tell you I'm not an order taker. I'm going to keep saying it. I ask a lot of questions, and I try to put the loan together even before we have numbers written down. Meaning, is this going to be a conventional loan, a VA loan, an FHA loan, a jumbo loan? Is it going to be a non-qualifying mortgage type of loan, maybe a bank statement program for a self-employed borrower that doesn't show a lot of income on the tax returns? So by me asking the questions, is it going to be owner occupied, a second home, an investment property? I'm already putting the loan together as we speak. And I think that kind of sets me apart. I don't ask the borrower, okay, what are you looking for? I'm going to ask the questions. Where do you live now? Where do you work? Are you self-employed or salaried? And because I'm doing this for so long and been involved in, like you said earlier, thousands of transactions, being in senior level management, they don't bring the very easy loans that come to my desk. It's always the difficult loans where the underwriter is having a hard time making a decision. So I've seen those types of loan files and those scenarios. And so I think that also sets me apart. I can look at a loan scenario from multiple ways, from the lender's perspective, the buyer's perspective, the underwriter's perspective. And the bottom line is we have to determine if the borrower is going to make the mortgage payment or not. And that's where I start. If I don't think the borrower is going to make the mortgage payment, then something has to change. Either we have to bring in more income, lessen the debt, bring on a cosigner. So I'm going to find ways to make the deal one way or the other. And if I can't, I'm not going to string it along for 30 days or 60 days or 90 days and say, look, I can't help you. We're going to figure it out right from the beginning and put them on the right path. So I think that sets me apart as well. It's a plan. There's people I've talked to for the last 3 years. They weren't ready 3 years ago, whether it was credit scores that needed to be increased, too much debt that had to be lessened, more income. Maybe they said they were going to get a second job. I said, well, I can't use second job income unless you're doing it for 2 years. So we're not ready now, but 2 years from now, let's see where you are if you can't get somebody to help you co-sign. So we put a game plan together. So those are the things I think that set me apart.
Yeah, you're a wealth of knowledge that I'm sure is a great asset to the people that you serve.
Thank you. And if I don't know the answer, I surround myself with great people that know it. And I don't know it all. And guidelines change every day. So I don't take that for granted either. Because yesterday the guideline was such and such. It may not be that way today. So I'm going to check today to make sure nothing has changed.
Yeah, we got to stay up to date, both in your industry and my industry as well. Mm-hmm. So how do you stay in touch with your current clients while they are searching for a house to buy?
Well, I was introduced to this great free program called Trello, Trello. And I saw the number one producer at the company I was working for at the time use this system to stay in touch with his clients before they even found a house, just from the pre-qualification phone call all the way up until the time the buyer and the real estate agent found the house for the buyer. And then also throughout the process once the contract was signed. And it just keeps me on track. It's almost like a to-do list that I sort by date due. And it forces me to pick up the phone, whether I email, phone, or text every 2 weeks, or depending on how motivated either the borrowers are to get the house. If they say, James, I'm not doing anything until June, great. I tell them I'm going to call you June 1st. And that goes on the Trello board. And it's dated June 1st. And when June 1st comes around, I'm either going to call them, text them, or email them because I told them I was going to, just to check in and see how they're doing and give them an update on what the market's doing. What are interest rates in June as opposed to January when we last spoke? So that's a great way for me to stay on task and partner with my real estate agent referral partners, because the realtors are so busy trying to find the properties. My job is to keep the buyers engaged and informed and motivated while the realtors are doing their job. So I partner with my real estate referral partners that way. I'm the communication piece. So that's one way. I also put them on a drip campaign through my CRM to make sure if there's anything different or exciting or something new that's coming out, that they're also aware of that. When the conforming loan limits went up, all of my prospective buyers and borrowers got an email saying, hey, the max conforming limit now is $647,200 in Broward County and Miami-Dade and Palm Beach County. So the conforming limits have gone up. Now you can increase your search because I can keep the loan as a Fannie Mae type of loan. So they all got notified of that via email. But to me, it's more of a personal thing. Email, some people are email people, some people are text people, and some people you have to physically pick up the phone and call them. So I notate that in my Trello board. If the last time I texted them, they didn't respond, they're getting a phone call. If I go to voicemail, the next one's going to be email. So I just want to keep them informed and motivated.
That's fabulous. And I know, having worked with you, you're not a 9 to 5 person. You're pretty much around the clock.
I feel like a doctor on call, especially now, because people have jobs from 9 to 5 or 8:30 to 5 or 8:30 to 6, and they may not read the emails or the texts or the voicemails that I leave until after they get home from work. So yes, there's kind of no downtime, but that's fine. I work around it and make sure, like we talked about earlier, I have that work-life balance. But I totally understand real estate agents that are calling me at 6:30, 7:30, 8:30 at night. Same thing as the buyers calling me at those hours, because that's the time that they have when they're not working. So I work when other people don't.
You really make yourself available.
Yeah, I think it's important. That's one of the other ways I think I separate myself. Some bankers that leave the office at 4 o'clock or 5 o'clock, you're not going to get them after hours, but you'll certainly get me after hours and on the weekends. If you need a pre-approval letter immediately because you're going to an open house and your real estate agent calls me and says, we need to be prepared to write an offer, I need the pre-approval letter at this purchase price immediately, I'm there to do it.
Perfect. That's wonderful. So what are you saying to the borrowers who have been on the fence, waiting for rates and values to come down before they make a purchase?
Well, I think you alluded to it. I said, is your landlord going to drop their rent? And they go, no, it's probably going to go up. I go, well, in this environment that we're in now, look what interest rates have done in the last 6 months.
Talk about that. Talk about the interest rates.
The interest rates have gone up dramatically. The average now is about 5.5% for a 30-year fixed rate with excellent credit and 20% down. Not everybody has excellent credit or 20% to put down, so their rates may even be higher. But 6 months ago, we were still in the high 3s, low 4s. So we're edging towards 6% now. So the people that have procrastinated, or they told me that 2 years ago, they were waiting for the values to come down. And I said, is there a magical builder that's going to build 11 million houses so that we can bring the inventory levels up to where the demand is? And they go, no. And I said, well, then we're at historically low interest rates. This was 2 years ago. What do you think is going to happen? Are things going to go up or down from here based on what I just asked you? And they go, well, they're too high now. I have to wait for them to come down. I said, I don't know if they're going to. My crystal ball is broken, but I could just tell you, doing this for so long, they can't go down from here until we have more inventory. It's a seller's market. It's been a seller's market for 3+ years. The values are going to continue to go up until we can equate that inventory equilibrium with what the market warrants right now. There's just too much demand and not enough supply. So the rates, the sellers are in control. They're going to continue to ask for higher and higher purchase prices. It's not coming down anytime soon. And when and if inflation hits and the interest rates start to move up, that house that you were looking at 6 months ago or 8 months ago, now you're not going to qualify for it because now the mortgage payment went up too high and your debt to income ratio is too high. And I hate to say I was right, but I was right. So I just tell them, look, I can't tell you when the rates are going to come down. All I know is I'm watching that inflation number. If it's 8.4% or 8.5% or whatever it is, the interest rates have to creep up toward that number in order for that to stabilize. I hope we don't see 8% interest rates. But if we do, we do. It is what it is. I can't control it.
You did see, I mean, we have seen in many decades ago where the interest rates were how high?
Well, when I got into the business in 1988, I was closing FHA loans at 11.5%, and people were thanking me for getting them into a house. And that was a drop from the early 80s when they were in the teens, 17, 18, 19% interest rates. And when they dipped under 10%, when I was closing loans at 9.5%, it was like a feeding frenzy. Everybody thought, oh, we'll never see single digit interest rates again. We better buy the house now. And that was at 9.5%. Little did they know they would drop all the way into the twos, many years later. But it's interesting. It's all perspective. And I have people that are so concentrated on the interest rate and not the affordability of the payment. And it's almost like, well, are you trying to impress your neighbors by telling them you got a 3.875%? Or do you want the house instead of renting for $500 more? I mean, the mortgage payment's going to be $500 less than what you're renting for. Who cares what the interest rate is? I think, I got to get that interest rate. Your home is the most important and most expensive asset. It's the largest transaction you're ever going to enter into. And if you're making a payment towards some kind of housing expense, that's yours. I hate to say it's like a piggy bank, but if it's appreciating in value, even if it's only 5% a year, there's still something you're getting out of that payment. If you're renting, you're not getting anything, but you're feeding the landlord and helping him with his or her mortgage payment. So I'd rather have my own. If everything else was equal, if I'm going to pay $2,500 toward housing, let it be in my house, not a landlord's house.
Absolutely. So true. So tell us, James, why did you choose to work for Guaranteed Rate?
I've worked for very large mortgage companies. You mentioned Countrywide, which was the #1 mortgage company in the 80s and 90s and 2000s until the crash happened. And I've worked for very, very small mortgage brokerages, and banks in between all of that. So I've seen, and I think I've seen it all. I find something else and I go, wow, I haven't seen that before. But I seem to work better at the larger mortgage companies. And I like residential lenders as opposed to brokers because we maintain control of the file from start to finish. So Guaranteed Rate is either the second or the third largest lender in the country last year, either right before or right after Wells Fargo, believe it or not. It's a nationwide company. There's 15,000 employees. We have so much support, and we have departments that handle departments. It's not like one person in a department. There's multiple people in departments. And they understand, they have the same ideals that I do with regard to getting people into the house. And you have to make it as seamless as possible. And I think that's been the biggest obstacle that I've seen with all the companies I've worked for in the past. We have to make sure that we're compliant first and foremost. We're a fair, equal housing opportunity lender. We have to do all of those things. I'm very compliant oriented as well. You have to have that, but you can't let that get in the way of getting the file from point A to point B and ultimately to close. It's not just paperwork. there's people involved. There's buyers, there's sellers, there's listing agents, there's selling agents, there's title companies, there's appraisers. There's so many people involved in a transaction that I think Guaranteed Rate does a really good job of making sure that they're constantly moving the file and informing everybody when they are moving the file, and ultimately getting that file through the system as efficiently as possible. And they don't get hung up on some of the things that other companies that I've seen in the past have, just to get the file through. So Guaranteed Rate to me is the major leagues, and that's what I've been looking for quite a long time. And I'm very happy with the company. And I think the way they do business is very similar to how if I had my own company, that's the way I would run it.
That's great. It's good to be aligned with a company that is doing good work, and you believe in them, and vice versa. So that's wonderful. Typically, how long does it take for the loan to go through the system from start to finish?
In a perfect situation, I can close a loan within 20 business days. Nothing is perfect, obviously. There may be snags in one way or another, meaning appraisals may be taking a little bit longer. Appraised values in this environment may not have caught up to the recent sales. So there may be little issues here and there. But for the most part, if it's a straightforward file and I have W-2s, pay stubs, bank statements, and I try to get everything before I even submit the loan into the processing department to make their job easier, then it'll flow through very quickly. If I just throw a loan in and say, hey, you guys figure it out, it may take a little bit longer. But my real estate agents that I work with and the buyers I work with, or borrowers, because I do refinances also, I let them know ahead of time what I'm going to need from the beginning, so it's not a shock to them. So they're not digging out tax returns from the last 2 years. They know that before we even get started. So I think it's all in the preparation. But 20 days or less is fine. Purchases, I always say, give me 30 days. I'd rather under promise and over deliver. If I close it in 20, that's great. Refinances may take a little bit longer sometimes. Again, the appraisal situation may take a little bit longer, but 30 to 45 days at the most.
And what is the best way to get in touch with you?
I've had the same cell phone number. I can't tell you how long, probably 20 or 30 years. It's the only one I remember. So it may have been since 1988. But I get texts on that. The cell phone is always with me. That's always the best way to get me. I can always send you my card via text, which has my email address. But the cell phone number that you have on the screen is always the best way to get in touch with me. And you'll find that I'm going to get back to you. I'm not one of those people that misses a text or I miss an email. I'm kind of anal about having no emails in my inbox. And because I see some people, they have 10,342 emails in the inbox, and I look at that and I have a little bit of a heart attack, and I look at that. How do you do that? And they go, well, I know what's in there. I've already read all of them. I said, but get them out of there. Either delete them or put them in a folder, do something with them. So I will get back to them as quickly as humanly possible. That's
great. Wonderful. And also for any of you that are out there looking for a mortgage, of course, James is a great resource. So reach out to James, and his cell phone number is 954-648-7848. And also I work in the area of mortgage protection. So once you get your dream home and you've got your mortgage and you're making your monthly mortgage payments, have you thought about what happens to you? What happens to your mortgage? What happens to your family if you become ill? If you cannot make those mortgage payments? There is something called mortgage protection. So if you need help with that, I'm here to help you. And I can be reached at 561-302-5760. And James, you've shared a lot of valuable information with us. I want to thank you very much. And the audience, please reach out to James for a mortgage, a refi. Please reach out to me for the mortgage protection. And is there anything further, any other tips you have that you want to blast out?
I think the main thing is ask questions. There's a lot of information that you can get and do your homework. That's great, but you should definitely talk to a mortgage professional, be it myself or somebody else that you know. And even if you do speak to somebody else and you want a second opinion, I'll be more than happy to provide that. So it's just ask the questions, make sure you know what you're getting into. As I said, it's the largest financial transaction you're ever going to make in your life. So I wouldn't hand it off to an order taker. You should make sure that you speak to somebody that's got some experience behind them.
Absolutely. And so thank you for joining us on the Sarah Finkelstein Show. You can find more segments on YouTube, Spotify, iHeartRadio, a bunch of other platforms. And you can also Google The Sarah Finkelstein Show, and you'll find more segments. Typically, the segments run about 10 minutes. Today was different because I was interviewing James, but otherwise, the average is about 10 to 12 minutes. And we just happen to love sharing valuable information to help you get to a better financial place. Thanks so much for joining us.
Thank you.